Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Today we're joined by Alex Walker, CEO of East Star Resources. Welcome back, Alex. How's things since we last spoke?
Thanks very much for having me, gents. Things are going very well, thank you. Very well.
Warm over there in Kazakhstan?
Yeah, it has been quite nice. I actually managed a weekend away. My parents are visiting Almaty. So I snuck a night away, and my wife and I went and did some of the local tourism, which was fantastic. Charon Canyon and a couple of lakes, which are just stunning. So, no, it was a really, really cracking weekend, actually.
I've always fancied going out there. It's one of the places that I haven't been, sort of, as the sort of, Europe connects into the Middle East, let's say. I always enjoyed visiting places like Istanbul and where, Antalya and places like that, where I think Turkey's the only country, or Istanbul is the only city that spans two continents.
Yeah, that's it. Yeah, through the Bosphorus. That's also a fantastic place. Almaty's a little bit smaller than Istanbul, that's for sure. But, nonetheless, it's a mountaineer's dream out here, which I wouldn't consider myself a mountaineer, but I certainly do enjoy a walk in the woods. So it's a beautiful place for that.
You're getting used to the food now, because I think when we last talked to you, it was interesting times, the food.
Yeah, very much so. Very much so. I certainly the various meats and things like that. The loshed, my Russian's improving quite dramatically as well. So beshbamark and things like that are becoming a bit of a staple of my diet.
So looking at news that's been out since we last talked, there's been the rock chip results from Dalny license, and then there's also been the completion of the EM survey on Rudny Altai VMS licenses. Do you want to just give the listeners a bit of background into those and how significant those releases were?
Yeah, certainly. I'll do it in that order then. So we did some more site visits, or one in particular, on our Dalny license. And it was reviewing a number of the targets that had been identified off the back of the drone mag that we did in September of 2021. And in particular, it was already a very interesting target of ours, the Eladigal group of occurrences. And so we took a number of our own samples, and we managed to do some further mapping on the trenches and expand on our concept of the area. And so what it looks to us now like we have quite an interesting intrusive related gold system. Importantly, the size, the surface footprint of the system is quite significant. And so it unequivocally requires quite a lot of follow-up work. At the moment, it's a littering of veins, high and low grade gold veins in quartz. And so what we need to understand is ultimately through drilling will be, what's the depth extent, what's the average grade, how do they carry, and how repetitive are they? And then if it can hang together, with a reasonable grade, certainly, as I said, the surface footprint's very large. And it's at surface, and so your stripping ratio would be very, very low. Then it becomes quite an exciting target. And I think I've said before, if this was for an Australian company and this was our only asset, I'd have about 5 slides on it in my presentation. But in our portfolio, it sits at the back a little bit, but it's something we're nonetheless quite excited by. You also asked about the volcanogenic massive sulfides in the east region. Look, I mean, this is I won't sort of turn it into anything it's not. It's a higher risk, high reward exploration target. Volcanogenic massive sulfides always are. The grades that we've seen across this belt are absolutely phenomenal. So, if you do make a discovery, it's an absolute game changer. And I've referenced before, having 30% of something like a Havieron still builds a very big company. And we'll see what this turns into, but I'd be quite happy to see that result. So the work that we've done, we did a heliborne electromagnetic survey, and for those uninitiated, basically what you're doing is you're flying a giant metal detector over your license, and principally it picks up the sulfides. And so what that will be is that the copper within the volcanogenic massive sulfides, which are copper, lead, zinc, gold, and silver. So you pick up the copper signature, and then that gives you your initial pinpoint for a target. It's not a perfect system, but it's a very, very good system, and it's been used very successfully throughout other parts of the world, including Western Australia, to make discoveries like Winu for Rio Tinto, like Havieron for Greatland Gold and Newcrest, and numerous others. I believe Julimar, or certainly extensions of Julimar with Chalice, was found in the same way. So it's a great technology, and it's never been used on our part of the belt. So we're very excited to hopefully soon receive the final process data, and then from there we'll use our international specialists I mentioned in our last announcement, MITRE Geophysics, who've been involved in numerous VMS discoveries. And at the end of that processing, we will put it together with the historical data, being the mines that have historically been on our licenses, as well as soil sampling and other parts of other bits of data. And that'll hopefully give us a couple of drill results for looking at drilling some targets early next year.
So, Alex, just in terms of doing a bit of geology course here, the fact that there is a line of VMSs here, volcanic mass, basically sulfides, this obviously is on a fault of some description then, I'm assuming, because effectively the volcanoes have all erupted. At some point, was this land covered with water at some point that basically meant that these sulfides were then covered into the VMSs or became VMSs? Sorry.
Well, in essence, I mean, you're absolutely correct about the line of them, and that's how these belts tend to operate around the world. You have them in clusters. It's quite a common, terminology, and they also tend to be very well structurally controlled. So, we've got the Irtish, I'll just call it the Irtish fault line, which sort of trends partly through our license. We're pegged to the west of it as well because we saw there was the potential for some gold. But ultimately, the volcanogenic massive sulfide targets are all to the east. And, what drew us, just from a high level perspective, what drew us to this belt is certainly our understanding of the lack of regional exploration that's occurred there. I mean, the reports, a lot of exploration basically died in 1992. And certainly even that was very limited. But you have, a mine, or in some instances, if you zoom in on the belt to our region, you've got, 4 or 5 mines in a row, and then a complete blank patch where there's cover, and then another 3 or 4 mines in a row. And we've pegged the blank patch. And so, typically lots of these mines started in the 1900s. I mean, we've got mines starting back in 1856, 1872, 1892. And some of them finished 20 or 30 years later, and some of them kept going, and some of them are still going. They were all outcropping. Every single one of these were found because there was some form of alteration at surface, or, gossan, or whatever the case may be, that pointed to something at depth. And so they do get relatively well explored, and they have been explored up to the 90s where these surface expressions were there. But where there's any real cover, then, and I mean real, even 20 to 50 meters, which is the bulk of our license, there wouldn't have been that surface expression. And so there was no detailed exploration in those areas. If I continue on with that concept, even the near pit exploration has been quite limited. You don't tend to find that people in the 90s and 80s and 70s did things like downhole EM. And when I say that the Helioborn EM, which is the process that we used, is incredibly good at finding, a high level conceptual targets. Well, ground EM is 10 to 100 times more accurate, more precise than Heli EM. And then downhole EM is 10 to 100 times more accurate than that. So there are fantastic examples in Australia, even in recent years. Malleebull is one of them, where, a target was drilled, an EM target was drilled. They hit sulfides without, that much copper in them or anything else for that matter. They did downhole EM and found a huge conductor just off hole, and then they focused their attention on that, and 2 holes later they were hitting 53 meters at 2 or 3% copper. So the technologies which we're applying, they've not been applied. They've not been applied on our licenses. They've not been applied on the belt. And so, again, it's still greenfields exploration, but certainly very sexy from a potential perspective. When you consider,
we never use the word sexy with mining. Come on, Alex.
Fair enough. I'll taper that back. It's certainly got a high reward ratio, I would say, for the risk that's being applied.
Okay.
So no, look, we're excited.
But
I'm
after our initial talk, though, really the guts of what eStar Resources is all about is the target and the goal targets that you have and you're going to be drilling. So tell us a bit more about those.
Sure. So hopefully in the very near future, we will be drilling on our Atmintas license, which has been the significant focus of the company because it's the most de-risked asset that we have in the portfolio, notwithstanding the rare earths, which we recently acquired as well. So we have 3 principal targets today, which are more de-risked than the other ones on the Atmintas license, and they are Novo, where we had our 63 metres at 4.5 grams, Southern Shabda, where we had a number of historical results uncovered after listing, also very high grade and very shallow, and Eshkilitau, where one of our intersections was 14 metres at 2.53 grams, I think, off the top of my head. And so those 3 areas, and Eshkilitau has quite a large surface footprint, extending along some very obvious structures. But those 3 are our principal targets to kick off this campaign. And the intention will be to understand, a lot more about the structures and the depth and the extent of these. And so we're drilling diamond core. And for again, super quick education, diamond core is the competent core that you see. So when someone makes an announcement, you can literally see the drill core as opposed to piles of chips and sand or whatever. It gives you a lot of structural information about the ore body. We're doing oriented core as well, and what that means is you can turn the core once it comes out to be the direction as it is underground, and so you can really start to get a much more precise shape of the ore body. You're not just getting grades and understanding the host rock and the lithology and so on, but you're actually getting the direction in a lot more precise nature. And so we're doing that off the back of the first 2 holes on each target, and then making a quick assessment as to the step out ratio for each of these. And typically it'll be, for the sake of argument, 50 meters further along the presumed strike, in either direction, and of course downhole as well, to try and see if the depth extent goes down to 100, 150 meters, and can potentially continue from there. So that's the focus, those 3 targets initially. And then we'll see, depending on time and budget, what we do in terms of other targets that have been derived from our soil sampling campaign and our more precise ground mag, 25 metre space ground mag campaign that we did over the last few months.
Okay, so if you had to pick your favourite out of those 3 mines or potential mines, which one do you think you would pick and why? It's like having to choose between your children, but I'm going to push you. It
is, yeah. That's tough. Look, I'm a fan of the Novo one because how can you say no to 2 meters at 131 grams and not want to follow that up? And certainly, the surface sample results, the historical reported results from rock chips and trenching through the pit are incredible. I mean, they were on our latest presentation, and they're in the hundreds and sometimes thousands of grams. And I know that's not representative of the ore body below, but there's always a lot to be excited about when you see very high grades. But I don't think Novo is going to be the biggest. I mean, looking at the mag data, it's unlikely the structure is going to carry a huge mine. So whereas I think areas like Eshkilitau and Southern Shabda and extensions of Southern Shabda along those fault lines, they probably have the potential to be much bigger in terms of total tonnage. So yeah, hard to say. I mean, I really hope that all of them will turn into a mine. And then, you know, in an ideal world, you've got a very high grade one that helps kick off your production, so your payback's much faster. But you know, the other ones bring the extended mine life that's required for you know, to build a nice big project.
The Nova one that you're talking about, has there been any because such high grades, has there been any artisanal mining going on in that area?
Yeah, I mean, historically, yes. And, you know, you've seen in the presentations the pictures of me standing over the pits. But even this year, we've actually had them. So, you know, there's a few new small adits within the mine. They've actually pumped out the water, which is it's good and bad, because we were going to use it for drilling. So we had to look for it somewhere else, but I'm pretty sure we've solved that. But it's good because now we can also see the bottom of the pit, which gives us a little bit more information on the veins and the direction and so on. So that's something else that's sort of helped dictate, you know, the upcoming work program.
The other scenario was the rare earth, and to be honest with you, this is one of the things that really got me interested and excited more so about East Star Resources, to the point where I have invested in myself in terms of the pension. So tell us a little bit about how East Star Resources came to purchase, or not purchase, but partner, and now hopefully you're going to go to 51%, 75%, and then 90% of this rare earth clay, which is the thing that really got me, was that literally I can take my spade and dig the stuff up and put it through the salt solutions or whatever it has to be done, and Bob's your uncle, I've got rare earth. So, you know, it's sort of a good opportunity.
Oh, look, I mean, it's look, I mean, I'll say nothing's ever quite that easy, but we certainly it has the potential to be. And you're absolutely right. Look, this was a deal that had to be done. As I've mentioned before, one of the founders of Discovery Ventures with me and an ongoing consultant is a chap, Dr. Rainer Elmies. And he runs a number of operating mines and exploration projects in Namibia. He's a Russian-speaking geologist. And he's essentially, I mean, almost to the point that they're building a rare earth mine. They're certainly at pilot plant stage. So he's right up there with you know, the top percentage of people in the world in terms of understanding rare earth projects. And unfortunately, I can't say the same about myself. But that's why I work with people like Rainer. So when I sent it to him and I said, oh God, I don't know, Rainer, the grades are a bit low. He said, Alex, no, look, this is an ionic leach, you know, an ionic clay. It looks like the ones from southern China. You need to take it very, very seriously. And so, of course, I did, and went back, did a lot more work, consulted with Rainer and others a lot more. And thankfully, our joint venture partners on the other side have been absolutely, you know, brilliant to work with. I really couldn't ask for better partners, highly experienced in country. And they've actually saved us, I think, a lot of time and effort just with their own knowledge of the operating environment here. One of them has voted the best lawyer in Kazakhstan 2 years running. He's the head of natural resources for a major international law firm. And so putting it all together actually became quite simple. And, you know, before we even started pegging ground in Kazakhstan, we'd reviewed over 150 projects here. And, you know, for various reasons, they didn't go ahead. But this one ticked absolutely all of the boxes. And it's an incredibly low risk potential for East Star to get involved in the quite exciting rare earth space. The deal structure, it involves no cash out, no shares, no equity, you know, really nothing for East Star shareholders to worry about until we've de-risked the asset. And so the expectation is once we get approval to drill, which will take some time, but once we get approval to drill, then we can actually de-risk it for, you know, $200,000 or $300,000 by drilling a number of holes, sending them off for both assay work and leach test work, and see if we can't get the recovery results from hopefully something simple like ammonium nitrate which in essence is a fertilizer. It's a very, very low, has a low chemical signature, a low environmental footprint to try and liberate the individual chemicals. So minerals, sorry. So, hugely exciting. Huge potential, really. I mean, there's 20,000 tons of contained in the old model that was put together, which we've redone in Leapfrog. And so it's got a low geological risk, and really it just comes down to the leach test work. And as soon as we've done that, which doesn't cost very much money, we'll know if we've got a significant project on our hands.
And just to put that in perspective, 20,000 tons of contained rare earth is worth what?
Oh, well, it's because we don't have the breakdown of the mineral elements, it's hard to say. I put in my last presentation about our peers and the average basket price, and I'll use that same reference for lack of having updated prices in front of me. But, they were running at about $80,000 a ton. And so at $80,000 a ton times 20,000 tons in the ground, but that's not how it works. Obviously, you don't get 100% recovery, in any facet. But, to give you an idea of the potential value, even if you ran numbers on it and said, well, what if you had a 20% margin or a 30% margin on a project like this? And you can start to extrapolate. And the exploration there is not done. I mean, we've got all the drill holes and we've got the geological mapping to show where the granites are. So, we can hopefully extend that resource as well. But, at the end of the day, it all comes down to the leach test work. We know the mining's simple. The pit, on average, the ore starts from about 7.5 meters deep. And the width of the ore body runs, I can't remember the minimum, I think it's about 4 or 5 meters, but it goes to about 53.5 meters. And it's clay. So you're essentially doing an earth moving mining campaign. There's no crushing, no grinding, no mill. So all of that high capex, high energy intensive operations, which add to both your capex and opex, we wouldn't have. Yeah. So you end up having a very accessible development option if the leach test work presents that to be the case. So we would be able to take it basically from being comfortable, spending a few $100,000 to being comfortable it's a real project. And then for not much more money, we can take it through scoping study and into pre-fees and so on very, very quickly and very, very cheap.
80,000 times 20,000, $1.6 billion. Even if you took
your words,
10%, yeah, no, my numbers. Even if you took 5% of that is $80 million or 65 million pounds. So I suppose want to put it in perspective that this rare earth thing has a great potential to, more than tenfold your asset value that you have in just one project. And that's one of the reasons why I said on last week's Sunday Roast that I felt that you guys were very undervalued. Kazakhstan is partially the issue. I think if people really understand that you have these 3 pretty major gold discoveries, because they are gold discoveries now, and that will be drilled, and obviously the potential to get JORC reports on those is going to be coming over the next year or so, and we've got and I think even though you said you were very excited about the VMS stuff is a long shot, but it could be massive. But really, between the gold and the rare earth, this company has got multiple potential to do very well.
And, that's essentially been the strategy. What I'm trying to offer shareholders is an opportunity for significant outsized returns. But most people have invested in the junior mining space, and they know that space is very hard. It's hard to discover an economic deposit. There's a number of things can go wrong, and so what we've wanted to do was de-risk each of our assets as much as possible, obviously, and take them very sequentially through that de-risking process, but also have plans and backup plans and other plans and so on. And, the beauty about Kazakhstan is it lets me do that. I said I reviewed 150 projects before we started. We can be incredibly selective about what we do, because there's not 50 companies or 150 or 250 companies sitting here vying over assets and having poured over the historical data. So we've been allowed that opportunity. We still have that opportunity in front of us today. And, there's no doubt that even if not everything we do works, well, certainly I feel that one of them will, and there's plenty of other opportunities to execute here in country as well. And I think we're going to see that. I even think we're going to see other large companies come in and start looking at exploring here. So, even in a down market, I'm sure we'll see things like that over the next 6 to 12 months.
Yeah, and I mean, you obviously have the potential to joint venture or literally sell one of those assets, which would then capitalize the company to go and make good use of all those other 150 opportunities, which is I'm sure an option that has occurred to you, and one that would make a great deal of sense.
And look, if all of the projects were successful, it'd be a weird scenario, wouldn't it, to have a company that's developing a VMS asset, a gold asset, and a rare earth asset. And so, they don't necessarily all belong together 2 or 3 or 4 or 5 years from now. It does provide us with a lot of optionality. And, what one thing we need to do is we need to assess what's best for our shareholders at any point in time, what capital markets want to see. And, ultimately we're trying to create value here. And so if the markets have been difficult recently, and if they did stay that way, then certainly we'd look to farm some of these out sooner rather than later. But what I'm trying to keep open at the moment is our optionality. While we're not desperate to do anything, and I don't mean doing a deal means that we're desperate. It just means that it's the right deal for the shareholders at any point in time. So it's nice to know that we've had some interest in everything that we've done today, to know that I can provide that option to the board and to shareholders if it's the right thing to do at the right time.
I said that basically if these assets were in Southern Australia or in Australia, then they would be worth many, many factors of what they're worth here in Kazakhstan. So you don't have to comment on that at all. I'm just putting it out there because I've said it once before, but it's true. Geographical locations of these type of assets do affect the value in an extraordinary way in mining, unlike other things.
Yeah, absolutely. And, I think as more big companies enter Kazakhstan, as companies like ourselves have success and more junior companies enter as well, then that perception of risk will get lower and lower, and so hopefully that discount that you've mentioned will follow as well. So, potentially those outsized returns are very realistic in a success scenario.
Alex Walker, CEO of eStar Resources, thanks very much for your time.
Thank you very much, gentlemen.
Thanks, Alex.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.